All right, welcome back to another episode of Asset Coach and Tax Strategist, and we are finally talking about the actual economic termites. How exciting. I don't know about you, but each time we do an episode, I can't wait for the next one. This is what makes Netflix so awesome, is that you can binge, right, entire seasons, and right, just awesome and on your timing. But I'm excited for this episode for us to dive into economic termites. Now, first of all, let me just talk about this. We all know what a termite is, right? So let me share my screen and let's just understand what a termite is, right? So we understand these termites are these little bugs that we see here, and these are just pictures I Googled termite damage, right? So this isn't rocket science. We know what all this looks like, but look at over here. I mean, look at the damage, right? And now these are all structural beams. These are structural beams to a foundation of or a ceiling or a roof of a building, of somebody's dwelling. Think of your financial house. Think about how these termites can eat away at the foundation of your house, can eat away at your walls, can eat away at the beams that hold the roof on, can eat away at all your hard work unless you treat them. You got to treat them. You got to treat termites. And how do you do that? With planning, by understanding the rules to assets, by understanding of what you want to do and how you want things to be accomplished, by not just sitting on your laurels, but actually doing activity and doing things. And so let's look at the different types of economic termites. So here is a list that you see in your book. We are going to talk about these top four, okay? But as we talk about these top four, we are also going to talk about these others. So we got taxes, inflation, time, laws, and regulations, right? We talked about debt being one, right? And how's debt affected? Interest rates, procrastination, not doing anything, just sitting around and waiting for something to happen. I'm just gonna think about magical things, right? It's not a cartoon. This is reality. Running out of money. That's a serious termite. That's a concern. Economic volatility. You typically don't have control over some of these things, right? Stress and sleepless nights as a business owner. Oh my goodness, we should probably move this to the top, right? We have serious health events. If we haven't prepared for certain things, these are issues. Now, I'm reading a book talking about the 5 pillars of wealth and asset protection. And health events is one of the pillars that hold up your financial house. But if we don't address these termites, if these pillars are made out of wood, guess what's going to happen? And they're holding up your structure, and they get all deteriorated and they break. What's going to happen? This all of a sudden disappears because it crumbled and fell over. What's going to happen to this? It's going to fall over as well. And all your hard work going to go bye-bye. Not only that, not only your hard work, but lost time. Okay. Lost time. So this is big deal. So, all right. So like we said, we're going to focus on taxes, inflation, time, laws, and regulations. We're also going to talk about, as we go through these economic termites one by one, we're going to look at the opportunity cost. What's opportunity costs? Opportunity cost, this is very important to understand. It represents the potential benefit that a business, an investor, and an individual misses out on when they choose an alternative. So you have choice. Choice A, choice B. You choose B. Guess what? You are not going to know what happens to A. That is opportunity costs. We don't know. We chose B thinking that B will be better than A. That's what we did. We made that decision, and now we got to assume. We don't know what's going to happen with A unless you do A and B, but then there's no opportunity costs other than, oh, I could have done more in B and less than A, or I could have done more in A and less than B. Opportunity costs, that's what it is. That's the uncertainty of it. Okay. So when we're building assets, we're doing our asset buddy system and we're building assets, we got to look at this opportunity cost, but also we got to understand not to dwell on this, to have a plan and understand the plan of moving forward. Okay. So that's something we need to understand and go through. The other thing is understanding the difference between revenue and income and lifestyle income versus non-lifestyle income. So let's dive into that. So revenue is what? Is the income generated by a business from goods or services or any other use of capital or asset. Use of capital or asset, what have we talked about in previous episodes, associated with the main operation of an organization before any costs and expenses are deducted. So in our profit and loss statement, we have what? Revenue. Revenue comes before expenses. So this is your sales. This is what you've earned. And then what comes next is expenses, right? So then you have your expenses, and we need to know what these expenses are. And then what do we do with expenses? We subtract them, and that creates our what we call profit. And out of this profit, as a pass-through, K1, that's the tax form for profit in a pass-through, hits your what? Your 1040. And now becomes taxable income. Okay. So this is what we got to be aware of. This is what we got to understand. This is what we need to address as we go through this process of what do we do? Okay. So now that we know that, let's dive into and look at, okay, so what's income? Well, great question. So income basically is the flow of cash or cash received from work or capital. Okay. Meaning I have an asset. That asset has created revenue and I've paid expenses. And now what's left over is profit or income. Okay. It's the flow of cash. Okay. So it's important to understand that. But income is, remember my saying a couple of episodes ago, income is taxable. Cash flow is planable. All right. Now let's go back up to the top here. This is cool. So income, then you may use the terms income, profit, or loss. The reason why I use loss is because actually on your K1, you could have a loss from your pass-through. It will still use the K1 and it will do what? Any of your wages or other income, positive income, and negative income all equate taxable income. Okay. So that's the importance of having a entity structure and having a pass through and knowing what you're structuring and how you're structuring it. Okay. All right. So let's continue here. Business expense line item. So we talk about the line item. Profit comes from your K1 distribution and it's set up as an S Corp or even a partnership. And it's going to hit your Schedule E, page 2 of your Schedule E, which is a schedule of the 1040 personal tax return. Schedule E, page 1 is all your real estate. That investment real estate, not your private resident, your investment real estate that is not in a partnership. And then Schedule E, page 2 is all your S Corp partnerships that flow to you in your K1s. Okay. All of that, page 1, Schedule E, page 1, Schedule E, page 2, Schedule C. Okay, your sole proprietor, your business, Schedule C, those 3 go to your Schedule 1, and that summarizes all your business activity. Okay, and then that will go to your first page of your 1040. Okay, so there's kind of the flow. And again, Tax Return Academy talks about that. We'll talk about it more in other things. We'll show you some examples and case studies and that kind of stuff, just not this episode. All right, so we need to understand lifestyle income, which is also just the terminology that I talk about. Lifestyle income is what? Your personal expenses. That's the whole reason why you're generating revenue in your business and profit, is that you got to pay for your lifestyle, right? But understanding your lifestyle expenses helps us understand what your non-lifestyle income is. And that is what a lot of people call the discretionary income, meaning money that's left over. I don't like that discretionary income terminology, because that means other people are saying it's discretionary. You don't need it. It doesn't pay for your essentials. It's no. It's my money. I earned it. It's not just discretionary. It's got a purpose. Remember, all assets need a purpose. It's the flow of money. There's only one asset, though, that can tell all of these assets what to do, and that is you. You are the only asset with a brain. Now, your spouse may say you don't use it as much as you should, but that's a different conversation. Here, what we're talking about is you as the asset with the brain. You're in control, and the plan tells all these other assets what to do. Okay. These other assets are like your employees. So you have employees in your business, and you have management or yourself, and everybody has their tasks and duties. They all know what to do. Your assets should know that as well, because your employees are assets, because your employees are helping your business generate revenue, keep revenue, and make profit. I know we're told that they're an expense and they're a liability. No, they are an asset. You get a return from every employee that, yes, you have to spend money on them, but they're there to help return more money, because if they weren't there, you got to do everything. Now you go back to that S quadrant on Robert Kiyosaki's S quadrant, and you're stuck doing everything, and it's just you. You have no system in place. Now you own a job. Congratulations. No, that's not what we want. So we want to understand that as we start building this out, and you tell your other assets what to do, they're part of the plan. They all have their task and their job to do. Okay. And so then we create our positive cash flow, which means it could be taxable income. Ugh, but that's not what I want. But you want positive cash flow. What we don't want is taxable income. Okay. And so here's where the planning and the art and science of planning come in. All right. So here's what it looks like. Here's the formula. This is the formula everyone goes off of. I've got income. I'm going to take out my expenses. And then, but before my expenses, what was squeezed in here before? I don't hear it. Taxes, right? We got to pay our taxes. Suck. So we have our income, we have our taxes, we have our expenses, then we get the leftover. Okay. So we need to understand that as we go through this process, that we need to be able to be aware of, okay, do I have revenue? Do I have income? Do I have my expenses? Okay. So what I want to do is, as we use this last few minutes, is the flow, the priority, your revenue, your business revenue. And now here's the thing too, is how do you generate revenue in the most efficient manner? And that's where marketing comes in, and costs analysis of how you're generating revenue, right? What tasks and what duties employees do to help increase revenue, right? So you want your revenue to come in as the most efficient, meaning less expenses if possible, to create the most profit. Then what we want to do is say, okay, time out. Okay, now we've made our business extremely efficient. We have this profit. Now we want to go in and say, okay, we're going to do some planning now. We're going to take this cash flow, because it's plannable, profit, cash flow, and plan that into other assets. And that's what that's going to do, is you have your revenue, you have your expenses, you have your plannable cash flow, then you have your profit. Okay. And then that, whatever that profit is, or loss, there may be a loss. And either way, you're allowed to pass both of those through to your personal tax return. Okay. And so that's kind of the priority of what we're looking at. Okay. So here we go. That was the introduction to what economic termites are, what they are, what we want to look at and understand with regards to opportunity costs, revenue, taxable income, all that fun stuff. And so the next episode, we're diving into taxes. Whew, I'm ready. I'm ready to do this. I hope you are. But this is going to be exciting. Again, I know the last episode we're going to talk about taxes, but we got so much stuff to take care of here and kind of build this foundation. So when I talk about taxes and I'm using language that we use, you kind of understand what we're talking about. It's not like, oh my goodness, when did Bob start talking Chinese to me? Or, he changed his language on me. No, no, no. We want to give you, now you don't have to remember everything we said, but we want to at least make it familiar to where you go, oh, I think Bob talked about that before. Let me go back into my textbook, my Economic Termites book, and read what he had said. Let me go back to the video, the YouTube channel video, and see what was that? What did he say? So, all right, have a blessed day.